Welcome, everyone. Excited to be here. First and foremost, thanks to the panel members for joining us. I'm excited to host this conversation. Ben did it, but as a quick intro, my name's Connor. I run sales and strategy for Scale Labs, core team, and we've got a great segment lined up. As Ben mentioned, we'll be covering the evolution of finance and really how traditional finance rails are coming on chain. We'll take a quick glance of where the landscape currently stands, and I think more importantly, start to look into the future and dig into what that journey entails. We've got a bunch of experts here, as well as Sawyer. I'll give you the expert title. So we'll kick things off. Maybe first, let's go around the horn. Could you just give a quick intro of yourself, what project you come from, and then we'll get into questions after that.
Should I start? So my name is David. I'm the founder of Keyrock. Keyrock is a large-scale financial institution in digital assets. We do everything from structured products to market making to over-the-counter trading, and are one of the largest HFT traders in the space. I guess my tagline for today is all price discovery moves on chain in less than 10 years for all assets.
Next one. Next up. Do you want to give a quick intro?
It's for me?
Yes.
Okay, cool. Hello everyone. My name is Vladimir. I'm a co-founder of Algebra. And Algebra is technology for decentralized exchanges. I think the most popular right now in DeFi space. We have more than 100 DEXs built on Algebra. And TVL is about 250 million. And big names like QuickSwap, Camelot, Tina, Black Hole on Avalanche, and many other DEXs choosing Algebra for building a DEX. So I would say, in simple words, we are Uniswap. Can you hear me? That's fine? Yeah. So in simple words, we are Uniswap, but focus on technology mostly, not like on audience. So we try to deliver the best DEX ideas, algorithms to the existing DEXs, and also launch our own DEX on promising blockchains. So that's what we are doing.
Thanks, Vladimir. Sawyer, how about a quick one?
I'm back in case you guys missed me. I will be subbing in, so sorry about that if you were coming for someone else. But very quick reintroduction on my side. My name's Sawyer. I'm the VP of Developer Success at Scale, as well as one of the lead community developers, and I build a lot of different stuff. So I think I'll be able to hopefully hold my own with these incredible individuals on the panel today.
Yeah, this is exciting. We've got experts across liquidity, the backend stack, complete OGs of DeFi, and then a developer, one that has supported a lot of the DeFi community here and other networks too. So I think we'll be able to dig in and have a fruitful discussion. All right, well, let's start with an easy one. Juan, we'll start with you, and then we can go around. How would you describe the current DeFi landscape today? Kind of, what have we achieved, and where do you think we've reached maturity so far?
I mean, maturity is never reached, correct?
If at all.
We're always gonna continue to improve, make things better. But basically, we got to a very interesting state of the market right now. Like if you look at a lot of the things that we were excited about over the past 5 years, that people kept on thinking that they're gonna happen and they didn't happen. Thinking about RWAs, thinking about tokenized equities, thinking about the money market Lego. All of those things are actually happening now. Yeah. And my thesis is that they're happening because money markets, as a fundamental pillar of digital assets, have figured out how to, in a scalable way, provide leverage to more than just Bitcoin and Ethereum. And so we're right now at the point where money markets have served as the infrastructure that builds a value proposition for other assets to be better when they're tokenized and when they're not. Because ultimately, that's what matters, correct? If you tokenize something and it's not better than its alternative, why would people use it? Yeah. And so for a long time, why would you tokenize a money markets fund if you can use it for anything, correct? So you want to add utility, that utility now exists. And I think the recent explosive growth of RWAs is actually mainly due to the maturity of on-chain money markets and the great work of companies like Morpho or Maple in the space.
Agreed. Vladimir?
Okay, so I'm more DeFi guy. So it's I think that 2 years ago when we tried to push like DeFi, it's like people say, okay, it's like meme coins, it's like maybe NFTs and maybe a DePIN. And I'm really happy that right now it's a lot of talks about DeFi renaissance and about that we feel that there are a lot of chains, a lot of ideas coming to DeFi space, and we see a huge amount of money locked in lendings, in new protocols like Panda, for example, and many others. So I believe we break a wall, and now we got a trust in the industry that DeFi can be used by big players. It's by institutional guys, by governments, and so on. So I think that's a great change which we achieved during the last year.
Yeah. Sorry, do you have anything else to add on that?
Yeah, I would just say I think we're at a really interesting point where I think we're seeing things mature from an access perspective, and we're starting to see I think like I always bifurcate between like the blockchain world and the real world. We're seeing the real world start to say this is actually an opportunity for us. And I think probably the two best examples, one I already called out, is the amount of money locked in lending protocols, incredible. And it's getting easier to use now that you see, exchanges like Coinbase allowing access to that through their exchange. Whether you like the idea that people are using the exchange to do it or not, like, hold your own tokens and all that is one thing. But I think just the access is big. And I think more so on the TradFi investment side, right? We just saw, Polymarket raise $2 billion from the owner of the New York Stock Exchange, right? And I just think that shows you that the market is starting to mature to the point where the real traditional finance world is seeing the value and they're trying to figure out how to capture it as their own, which again, I think is starting to show that maturity.
Yeah. Oh, go ahead.
I just would like to add that I think we should not ignore Hyperliquid, because it's for us, like for DEX perspective, like Binance and Coinbase are almost TradFi, I would say. So it's like centralized stuff with big players, with professional market makers. While on chain, I think it's like the first real big example when we feel that centralized trading could be done on chain, and you see the results. So I think that's also a great step to show that it could be done on chain with trust, and we see that's how it changed. And the next step, it's connect this exchange with DeFi protocols. So we could expect even more growth, because you can imagine that if our liquidation will be automatically done in Aave by Hyperliquid, it will be a new era in DeFi.
Yeah, I totally agree with what everyone said. I think, maturation, I think, is a different word for everyone, and people have different scales of it. But I look at it as more of kind of segments of time and big steps. And I definitely think we've completed at least that one large step. And you have that kind of DeFi 1.0 class matured. And I look at just crypto in general as like a principle, as three kind of main things. You're either minting, you're moving, or speculating. That's what we've really proved out. You're minting assets, you're moving assets, or you're speculating on them. And DeFi has shown that it can support those three critical areas. And you have DEXs, specifically like the Algebra team, you have lending protocols, and then you have more of the trading apps like a Hyperliquid, all reaching maturity and security. I think the major lending protocols, the amount of money that's in it and how lindy they are right now, they feel fairly safe. And famous last words, right, in crypto, fairly safe. But, we see crashes all the time, and they hold up. And they hold up better than the traditional finance world, which is incredible to see. And which is why I'm really excited to now take that next step, right? It's the building blocks are in place, the ecosystem's there to support it. Legislation is now behind us as a tailwind. Now, how do we actually innovate on these building blocks? Because to this point, I think there's been, types of innovation at the edges, but for most, it's been, becoming par to traditional finance. Maybe it's more capital efficient, maybe it's more accessible, but it's a little skeuomorphic, where it looks like the old world, but just in a different way. What I'm really excited for is how are we going to push this forward, and how does this composability unlock everything from there? So I think that leads me to my next question is, where are we currently constrained right now? What's blocking DeFi from taking this next major step? And then is there one of those things that's, initially most solvable out of all those blockers?
I can answer this one. So Connor, I think that's a great question. Because if we're talking about the DEX side, if we look to Uniswap v4 with the hooks ideas and or algebra integral, so right now we can do anything with the pool. So we can stop trading, we can change fees, we can even like rebalance liquidity in the pool. So everything. But the problem, we do not know how to do it right. So that's really strange situation. So our technology is at the level that we can control everything in trading, but we don't know how to do it. And I think that's the main blocker for us. So we have a lot of data, but we do not know what's conclusion, what we should get from this one. And that I think that's I believe, especially for scale, so it's connected with the AI. So that's I think the next step for us as a DEX to understand how to analyze this data and adjust our behavior to capture the max value thanks to this data. So that's at least what's a blocker for DEXs at the moment. So we can do it, but we do not know how to do it.
Interesting. Yeah, it's good to see that. Juan, any other thoughts on that?
Yeah, so I mean, look, I think I might have a couple of opposite opinions on this one, but when you look at institutional adoption right now, I think I've been starting to really make sure I keep a split mind between what are financial institutions and then institutionals. And I think, right now, majority of people are putting both in the same bucket, but they're not the same, correct? Like financial institutions are moving on chain, that is very evident. You have, the BlackRocks of the world interacting. Majority of banking institutions are opening accounts, many of them even with us. And they're coming in, correct? But they're coming in not in the capacity of allocators. They're coming in the sense that they see an opportunity and they wanna have a piece of the revenue that comes from it. But majority of the capital is still retail, actually. So at the moment that level of institutional trust, in my point of view, is not there. All of the research that we have done related to on-chain asset management seems to indicate that majority of the capital on chain allocated to vaults in the industry is still not from institutions. Institutions are there try to make money out of the situation, but actually majority of family offices are still not convinced about the risk-reward ratio to allocate to smart contracts or the obfuscation to counterparties that might explode. Which takes me to what are the two things in my mind that are really missing for this to be solved. And one of them is really kind of like as simple as it sounds, which is insurance. Like there's not been any real capacity for like large scale insurance where people can confidently allocate to innovation. The only thing that managed to have insurance are things that are already very lindy, so kind of like defeats the point. So yeah, you might actually find a way to insure against Aave in the main pool, but that's not the issue, Greg. The issue is you don't have institutions wanting to experiment or interact with new paradigms very quickly, correct? So it takes very long time for those paradigms to become, like you say, lindy, for them to be to kind of like have enough years of track record. And so kind of like time is the only thing that plays in our favor as time goes by, that kind of like serves as an insurance, but it is really not. Yeah. And then the second thing is what I typically call the Apple Store effect, which is at the beginning when the smartphones came out. And I don't know if you ever had an Android phone before, but back in the day, like Web2 applications, they used to be scary. People didn't want to put their credit card details into a Web2 application, right? Because they felt like they might steal my credit card details and then I'll lose all my money. Or the app itself is a scam, or it has a virus or whatever. Yeah. And that only lasted a few years. Actually, it got to a point where the Apple Store and the Play Store, they started to kind of like realize that they had to actually serve as an auditor to the publishers. And right now, because of the way that the blockchain industry works and how amazingly decentralized it is, there is not really any brand that is powerful enough or trusted enough. I mean, we have a bunch of these auditors, but they are not lindy whatsoever. The only one that know those auditors are the geeks in the industry, correct? So you might know of the great work of Zeppelin, but the reality is that majority of people don't have a clue, who they are,
Right.
or why to trust them. And so there is no like a single point, like an app store where you would say, okay, if something new gets published there, and because of that, I trust it. As a matter of fact, like the fact that a new application comes into Ethereum, for majority of people, is scary. It's like, oh fuck, it's just going to explode in the near future. And so kind of like that idea that you start to have like that Apple Store phenomenon where things are inherently trusted, even if not proven, is still needed for those institutions to come in. And insurance is part of it, but also kind of like really a systematic process for publishing and auditing quality, which does not exist really.
David, can I ask you a question? So it's in our DEX world, we feel that retail people start be united by vaults which are managed by professionals. So
Yes.
let's say, so you feel the same. So I think that like for retails, it's, I would say, they unite their liquidity, combine their liquidity with others, which is managed by professional, like institutional guy mostly.
Yeah,
That's what we see
exactly.
during the last year.
Yeah, exactly. And that's why for me, it's kind of like, like a good paradigm shift to start thinking about it as financial institutions versus institutionals. Because it's very interesting for a financial institution to enter the market today. I mean, like billions of dollars are being allocated to on-chain vaults. But when you look at the numbers on asset management outside of the on-chain world, these allocators still allocate very little to on-chain strategies. I mean, they almost not.
Mm-hmm. Do you see that being do you see that unlock being a time thing where we spend X amount of years and then people become comfortable just because of the amount of time and maybe they have colleagues or other folks that are innovating at the edges that are getting at it? Or do you see it as a amount of money that comes into it and more of an innovator's dilemma where there will be either smaller institutions or smaller financial institutions that will take the risk trying to leapfrog others, and they'll get to a point where they've got to play catch up? Or maybe it's a combination of both. Like, I guess as you've spoken with these folks, what is the hesitancy there?
Yeah, I mean, I think a lot of them are now starting into the products that are more simple, so simplicity is king. I think that, if you look at the things that are working, the most simple stuff, correct? If you think about it, like, money markets, V1, very simple stuff that had enough time to prove itself, but it's very simple, correct? And so we tend to, there is majority of the narrative of innovation right now is going on, agentic finance, which is great, correct? But the more sophistication you bring and the more complicated it is to understand, the more scary it is, correct? If people don't even trust a smart contract today, it's going to be pretty hard that they trust 5 smart contracts with an agent that is moving money between them, correct? They might not trust that very quickly. And so I think all of those issues, they ultimately get solved through innovation. Like I really think that, again, the reason that RWAs started to come on chain is not just because institutions started to move. It's because there were new primitives and new financial models to allow for those things to come on chain in a more safe way, correct? Like if you think about the evolution of money markets where, Aave has this fantastic system, and then Morpho comes in and says, hey, why don't we bring a third-party risk curator in the middle that can also start doing a job to evaluate if these other assets should be served or not as collateral? And then Pendle comes in and they say, actually, we can start splitting the principal from the yield. And then, funny enough, those two things together independently, correct, two complete independent innovations, it's actually the reason that all of a sudden made sense to bring these assets on chain. So most probably it's going to be about the same. I mean, I think somebody's going to figure out how to do the whole insurance piece in an effective way. I've seen some startups trying to like do it, and something is going to stick there, but nobody has really like got it completely right. It could be maybe through the restaking technology and using that as like a mechanism for like like insuring at a low cost. But to be honest, it's not so straightforward. So I'm not going to speculate that I know what the answer, right? But I think it's going to be somebody's going to come up with the idea that unlocks that piece there. But I think at least on like you see money market funds, I mean, it's already working. Yeah, it is.
Yeah, I think one thing that we're really excited about, specifically with Fair, since Fair has proof of encryption and encrypts transactions at the consensus level through BLS threshold encryption. It actually allows for a lot of these money markets to happen on chain in a confidential way. I mean, you think about it, especially once you get into like corporate debt structure and the top 500 companies in the world, they don't want others to know if they're making investments into certain companies or into certain commodities or crypto, or lending out a certain amount of money. That can be risk involved, as well as just strategy on chain. When all these corporations are so competitive, when that intent leaks through a mempool, it could be devastating and you lose your edge. So I do think a lot of that is going to come from encryption pieces or some type of privacy preserving elements. And that's something that we're really excited about, like kind of innovating on the edges right now.
Yeah, you could have also like, once you start to have like these encryption mechanisms, then you can have like, for example, third-party stamps that or maybe CK proving in the middle, where you say, okay, you cannot see what it is, but I can assure you the money's there, correct?
Right.
And that connected to some kind of like mechanism where it still feels and looks like DeFi, but you just so the money's there, you just don't know what it's doing.
I definitely think as part of that, I think a big piece, and I think you kind of said at the beginning, I think a big piece is probably both for institutions, from what I've kind of heard and been talking to, as well as from just more like normal, regular people who are kind of your retail crowd. I do think the biggest thing is simplicity. You can have the most complicated protocols behind the scenes, but I think 9 out of 10 people are always just going to go towards simplicity. Like, not financial advice, but you ask the average person on the street, like, hey, what should I invest in? And like the majority of people at this point, at least in the United States, respond with, oh, just invest in the S&P 500. Like, that's just easy, right? Like it averages, it goes up, right? Market goes up. And so I think it's really interesting because there are ways to functionally make more money if you know what you're doing, but obviously there's more risk involved. And so I think it's an interesting thing around when we start to look at DeFi is how, like, all the innovation occurring, how do we make it simpler for retail and institutions? Because I think you can build as complex of a system as you want behind the scenes with hooks and with, making prediction markets, perp dexes, all this leverage trading. But at the end of the day, most people, I think, are still just going to be like, take my money and make me money. And if you can do that, I'll give you my money. And I'm willing to pay a fee to make that happen, even if there's mounds of complex logic happening behind the scenes that is intangible to the average person.
Yeah, so hear me out on this theory. You're going to like it. So in crypto, majority of people that have been doing this for a long time, let's say you, are generally early adopter type personalities, correct? You like to experiment, you like to do stuff. And you started to trade and like use all these systems and try the V3 engine of Uniswap early on. And then every time a new protocol comes in, you go and you play around, and we all been doing that. Yeah. And then you see about something like, let's say it's only like 8 months, 10 months from now, there's this massive explosion of TVL into managed vaults. Like you said, like giving money to others to manage. And it kept me thinking, what the fuck happened, correct? How come that all of a sudden everybody wants to give their money to somebody else, And so it could be that either people that just want their money to be managed coming in and they're just using the technology for that, or all of us just got tired of losing money, because the reality of it is that we were just for years doing stupid shit. And then all of a sudden now, all of the crypto people that started early on with me, sometimes you made a lot of money, sometimes you lose a lot of money, and then maybe now they're getting to the point where they're saying, actually, I made enough money, but I'm definitely not better than if I just went long Bitcoin since the beginning, correct? So why don't we just do that? And we do the S&P version of that in crypto would be like the vaults, correct? Like just put the money in the vaults and
exactly
with the care of it.
Exactly.
Yeah, if I could add, so it's it's one of the reasons why people use the vaults, because if you have a vault, you can come to a protocol and ask for extra benefits because you have already a lot of money there. It's what we see right now in DEX space. Previously, you have to launch a token which which you send rewards to people who provide liquidity, like liquidity mining. Now it's more about like OTC talks and say, okay, if you give us 100 million, we will give you 15% of our token supply to Vault, something like this. So I think that's also a reason why we see that like more and more vaults appears and appearing and so on. So that's much more easy to protocol to get initial liquidity and for people who provide to get extra benefits thanks to this one. And also, regarding that, you have already mentioned about simplicity of protocols. I think that almost every protocol right now have two versions, like Pro and for beginners, because there are two types of people. So like crypto guys, it's today I have demonstrated we have new design for DEX, and one of our engineers say, "Why is this? I don't see. I want to see APR and that's it. I don't care about the color. I don't care about like how it's what's about markup. I don't care. Just show me APR." And that's it's pro users, they don't care. Or if you see like curve design when this was launched, it's what is this? And for people like who just come to crypto, of course they're shocked. And for them, we just need to create a layer of good UI, of understanding what's going on.
Yeah, I think it's interesting because, a couple of comments to some of those things. For us who are terminally online and trying everything, it's even hard enough to keep up with what's innovating. And it's even difficult to figure out, okay, what are these levers I can pull? How much time do I have with that? And I always joke with my buddies that I've turned into a little bit of like a boomer crypto person because I have gone back down the risk curve, and compared to the 2016, 2017 days where I was just full porting into, BitMEX and Binance. And
you're the customer now. Great.
Yeah, and it's interesting is, how does that compare to, kind of broader retail adoption? And does this mean that, to Sawyer's point, a lot of people are in, SPY, they're in some type of ETF. Does that completely come on chain? Where do you guys see traditional finance and on-chain finance either converging or competing? Do you think there's because we've been talking about some of the hesitancy of coming on chain. Do you think there's elements that just never come on chain because of either insurance or fear or just confusion? Or do you think it's kind of an inevitable that the rails will fully transform?
I can allude to that if you want.
Of course.
I've been thinking a little bit about, like the basic answer of that is everything, ends up being one. That's like the basic answer. That's what you hear around. Now, how does that happen? That's the hard part of the question, correct? And I don't buy that it's as simple as everything gets tokenized into basically Ethereum and Solana, and then it ripples to all the other chains, and it kind of like goes into this happy path. I don't buy that. I think what ends up happening is the financial institutions start using the technology, which is the stage in which we are now. They realize that there is value to be had from this technology, and they realize that the value capture is at the network level. And at that point, they basically gang up to try to own the network. And so we first go through a phase where they accept that the world is going on chain, but that doesn't mean that they accept the chain as it is today. And then basically they start doing this parallel world where traditional finance starts tokenizing everything with kind of like a strategy to have a customer acquisition strategy where customers are. So you want to reach out your customers from, the hubs where majority of those customers are today, let's say Ethereum. But for your existing clients, you don't have any incentive to like push them to go to Ethereum. You want to push them to go to a middle layer technology where you can monetize the network, correct? And we've seen some kind of like versions of these So like Cantor, correct? And basically where you would say, okay, you would have these new chains that come in, and all of a sudden you'll see that they have an enormous amount of financial institutional investment into them. And it's kind of like a reflection on them accepting that it's going this way, but not accepting that they missed at the early on and trying to kind of like play it back. I think ultimately it does not fly, it doesn't work. And in the long term, it does end up slowly but surely converging into the place of price discovery being the chain, correct? And ultimately, we end up or at least my view is that we end up in a world where all of the financial, the chain or DeFi serves basically all the financial backbone of all banking, and so all money markets goes on chain, all rates go on chain, maybe later on mortgages go on chain, and at that point, kind of like all of finance is DeFi based, and then you just have like a layer of interaction where creativity and innovation can be built on top of those pillars. But that is in theory not great for the incumbent, and so that pushes them to kind of like try to get there through a parallel route. Yeah, if you maybe a parallel to explain how that works, we actually have an example of that already outside of Web3. I mean, for those of you that will know a little bit about banking regulation in Europe, in Europe, there's already something that is called the open banking protocol. And this was something that is actually relatively recent, where the European Union forced all the banks to have exposed APIs. So it's actually by law, they cannot not have it. And majority of the very aggressive explosion of fintechs in Web2 came from the fact that banks were forced to give you data, correct? So all of a sudden you have like any bank can build a UI on top where they can connect to the API of ING or BNP. And then all of a sudden they can build a fintech around another added value service, but you can also see your balance of your account and make transfers from that account, okay? Now imagine a world where DeFi actually does all of those things. You basically have that on steroids, where all of the financial get abstracted, and basically the chain serves as a mega API for any creativity founders to build on top. So hopefully that's where we get to. But I do think in between, we're gonna have a lot of these kind of like parallel chains being created to try to capture value along the way.
Right, and yeah, you can see that right now, right? You can see that with Stripe's Tempo, Circle's Arc, like you mentioned, Canton, Connexus, these other different financial institutions that have private blockchains, or these combo private or public but permissioned blockchains. Yeah, I think we'll have some stumblings along the way, but I fully believe that to hit the point of composability, you need to have those entry points, across.
That's the way that they compete, you see. So it's not that it would be kind of like traditional technology competing versus blockchain. I think we're getting to the point where everybody knows that that's already like a lost battle, to be honest. But that's the type of competition that we're gonna see.
Yeah, agreed. Well, it's been a great panel. I want to squeeze one last question in, just knowing that we're coming up on time. We've talked about kind of the current state. We've talked about some blockers, but let's make it a little bit more fun. When we look forward, what does DeFi look like in, let's say, 5 to 10 years? You can pick either 5, you can pick 10, but when it makes that next maybe 2 steps, major leaps of innovation, crosses the chasm, we have adoption. What are some bold predictions of a world that you see coming? And there's some early signs of that too.
Okay, so it's I think from our perspective, and add to a previous question, so we believe in wallets. So it's like one application where you can manage all your like traditional finance and crypto in one place. And it's, as already discussed, so right now we have so many information, so many data, so we expect that it will be quite easy to get answer what you're looking for. So let's say I would like to get, I don't know, 10% in APR in stables or like in dollar, and you'll get options in TradFi or in crypto on one place, and you can decide. So I think we need to simplify what we could provide at the moment, and it will be a really big step. And also have one applications like neobank with all crypto and traditional finance connected. So that's what we are personally looking to in the future. So because right now it's so complicated, as you already mentioned, so many chains, so many liquidity fragmentation, and it's human brain. It's not enough to understand everything and how it's connected and how to get the best revenue for this one. So we expect it will be like super up. I know, like WeChat maybe in China, but for finance, everything in finance. So it's bad that like a lot of chains are coming. So it's not about you guys, but in general, like the USDT launching own chain, like Coinbase, everyone. So try to capture some value from this one, but it's okay. I hope that we will have maybe like 3 or 4, 5 chains in the future, which will be all liquidity are there, and it will be much more effective at the moment. So less chains and super app for managing your finance.
Nice. Juan?
How much time do I have?
Not much, but we can let you go over.
Okay, let me see. When so building on the concept that I was explaining on this idea of kind of like pillars of finance for creativity and the capacity to build anything on top of them, that's ultimately where I think DeFi ends up. But what's important is what does that mean for society and what is the impact that it has, and I mean that's at least what drives me, which is that I thoroughly believe that today we live in a world where every basically country is kind of like an economic bubble. You could visualize it. You have like hundreds of these very segregated economic bubbles, and some people in the world are lucky enough that they have the capacity to arbitrage between these different economic bubbles. They have the wealth and the capacity to take advantage of the inefficiencies between all of these markets, but majority of the people in the world, unfortunately, are not there. They are constrained to the economic reality in which they live in. And if you're born in a place where to buy a house you need to pay a mortgage 15%, that's actually going to determine majority of your capacity to be financially free in your life.
Mm-hmm.
And I'm not talking about poverty in Africa. I'm talking about just people that are living good lives. The majority of the bulk of middle class in the planet, they don't have the capacity to do much outside of the financial constraints that their own country enables them to do. Even between the US and Europe is extremely different. And then you have, I'd say, people like me maybe that can understand those systems and take advantage of them, and I can borrow money in one continent or in the other. And in a world where DeFi gets to really be the rails of finance across the world, all of a sudden this goes away, correct? So it's for me, it becomes the ultimate equalizer. When it happens, if it happens, it's the ultimate equalizer, correct? It becomes fair game, and everybody from anywhere in the world, if they work hard, they can try to achieve the same. But
Totally.
today is not, because you cannot get access to the same quality of financing, you cannot get to the same quality of debt, you cannot get that quality to the same quality of venture capital.
Yeah. I agree with both of you guys. I think like how I'd probably summarize that is access and optimization. I think like overly simplified, but how do we give access? And the original goal of Bitcoin and crypto was banking the unbanked, right? How do you do that? And then how do you optimize from there? That's what we're focused on Fair. We believe in a world where encryption unlocks all this innovation. And for me personally, I think for the rest of our team, it's going to come from agents that are supporting that. So when I think about like actually equalizing the playing field, how did these wealthy people in the past used to be able to play these different economies that you talked about? It's because they had access and they were able to optimize. They had access to those different economies because of the amount of wealth they had, and they could optimize because of the institutions, the arbitrage, the bots they have. Now I think with the composability of blockchain and the encryption that Fair can bring is you'll have that access because of the blockchain space, and then encryption unlocks agents to be able to optimize for you. You can have consistent arbitraging, indexing, and rebalancing, and then access into new capital formation. So yeah, I'm excited for this new world. We'll see how long it takes. So we'll come back to this in a couple of years, see if our predictions are right.
I would like to think then that banking the unbanked is done. Check.
Yeah. Yes.
Did that. Done. Yeah. And the next one is equalizing financial opportunity across the planet.
And that's what we're here for. Awesome. Well, Juan, Vladimir, so I really appreciate you guys